Something moving underneath the silence. You can't stop it, you can't see it.
There's a spark you can't control. No face, no throne, no single soul. No crown, no king, no guarded gate. Just coded rhythm, rewriting fate. They don't trust what they can't hold. They fear what they can't control. But every system once began as something small no one would stand. They laughed at fire when it was stone. Now whole cities glow from what was thrown. Every empire starts unseen. Every future starts a dream.
It's rising, it's breathing through the cracks in the ceiling.
You can doubt it, you can fight it,
but you won't stop the feeling. There's an invisible fire burning under the ground. You can't cage the wire, you can't shut it down. We are rising higher, no walls around. What you can't see now will shake this town. It's burning brighter. No turning back now.
yeah. It don't knock, it flows through cracks. Built by hands that turn their backs. No permission, no applause. No signature from broken laws. They building towers made of glass. I'm building shadows built to last. They measure worth in what they see. I measure mine in legacy. Call it risky, call it strange. Every revolution looks that way. What they mock today is small. Tomorrow stands 10 stories tall.
It's growing, it's glowing, even when you don't know it.
It's silent,
But violent, and nothing can control it. There's an invisible fire burning through the sound. You can doubt desire, but you can't drown the ground. We are climbing higher, feet off the ground. What you can't see now will turn this world around.
I've been doubted, I've been tested. Watch belief get dissected. Watch fear spread contagious fast. But truth don't break it out last. When pressure don't erase the flame, it only teaches it to aim. And when the dark feels permanent,
That's when the spark turns permanent. There's an invisible fire burning us now. You can't pull the wire, you can't shut it down. We are rising higher, we won't bow. What you can't see now will own this ground. It's burning brighter. We're walking through the fire. No walls can hold us now.
All right, legends, welcome to another day. It's Thursday, 11:15 in the morning here in South Africa. Hope you're all having a fantastic Thursday. April Fool's is officially out the way, so I know there's a lot of people that did some pranks yesterday on their thumbnail saying that it's the last day and some crazy stuff that I saw yesterday. But we are here doing some technical analysis on the price of Bitcoin. What can we expect next? And yesterday during the live stream, just make sure that you guys can hear me, you can see me. Yeah, there we go. Excuse me. Yesterday during the live stream, I spent quite some time talking about this. Well, okay, now we got the drop here to the downside. I am still in the short and I got stopped out of the long. Okay, got stopped out of the long. Right, with profits. Okay, so it's just about, It's just scratching those dollars from the market, whether we move up, whether we move down. And what I want to discuss today is, well, what is my next trading plan? What am I looking for? Okay, remember to smash up that like button if you haven't done so already. Let me just get myself comfy over here. Just want to move this mic a little bit back. Now the question is, are we going to move down, take the low, right? Because we did get the fake out, or are we going to get a little bounce here back to the upside? That is now the question, and maybe get the breakout to come and tackle the highs here to the upside. That is what we need to discuss now, because I see that everyone is talking about this fake out from this trend. It's also now doing the rounds here on social media. And yesterday, I know guys, I spent about 20-25 minutes talking about this, okay, when price was there, and the probabilities, and why I would not like to long this zone. It's purely from a strategy perspective. There's no Elliot wave theory in here, nothing. It's just from a D-line perspective, which is the breakout of trend perspective. I did not like what I saw, okay, and now we have candle closes below the trend, and from a probability perspective, nothing's ever guaranteed in the market. When you have a fake out, you usually come and take the low. Okay? But there's still that chance that it forms a higher low and it then breaks to the upside. And that is the trading opportunity I want to talk about right now. Because if I see a reaction in this zone that I would like to see, I will attempt a long. Okay, just want to see where is my, I just want to drag a screen here to the upside. So currently, just want to do this. Okay, you guys can see still in the short from yesterday, because yesterday I spoke about that short here from the 1-to-1 extension. Okay, almost got stopped out, but luckily not. And now I'm just, benefiting from the profits here to the downside. As you can see, I have taken most of the profits already. Okay, but I'm leaving a runner, because if it wants to continue to the downside, that's what we need to discuss. Okay, well, then I'll just make a little bit more profits. Okay, and then I will close my position or just leave it running to the downside. I do have some specific profit taking areas that I'm keeping an eye on, which I'll discuss today. Okay. Looking sharp, dear old man has been working out. I try my best. I have lost a lot of weight. I'm not sure if anyone has noticed. Doesn't really matter. I'm doing it for myself, but I have lost a lot of weight in the last 4 months. Okay, but guys, now let's do some technical analysis here on the price of Bitcoin. I think this is confusing me because I have it on the wrong side. Let's put it like this. Okay, so what we need to discuss, okay, let's just quickly tackle this trend line again. I'm not going to spend 20 minutes on this trend line again today, but usually when you have a fake out, there is an increased probability that you take the low. Doesn't have to happen. It's unfortunately there's an increased probability, and I'm not sure why I always use the word unfortunately when price moves to the downside, because it's just a trading opportunity. And I mean, I am in a short, so, I'm going to benefit if price does continue to the downside. So it's just, okay, when people talk about bearishness, they usually frame it in a negative way. I see it as an opportunity and a trading opportunity. Okay, so when you see a fake out, there's an increased probability to take the low. So I will be looking for a long once you swing the lows and we start trading back above, because then I know where to put my stop loss, sign of strength. And usually what then happens is when you tap the trend again, that is usually where the real breakout takes place to the upside. So as long as price is below this trend, it could potentially just continue. Okay, because there's still a very, very valid bearish case scenario here to the downside where price does claim $60,000. And this could be the short that takes us there. So, and that's why I'm leaving a runner to the downside, because you don't know. Okay, but as always, I have taken profits. So if price wants to reverse and move back to the upside, I will be stopped out with profits. It's just a great way to trade. And as you guys can see there, okay, look at how close my stop loss. Okay, I didn't move my stop loss from yesterday because I was doing my birthday celebrations yesterday. I just left the trade. Okay, almost, look at that. Almost got stopped out of my short. Right, because I like to protect my position, okay? And, well, luckily this morning when I woke up and I saw the price, dumped here to the downside, I was like, well, thank goodness I'm still in the trade, and I took a decent amount of profits here to the downside, and I will take a little bit more profits once we claim this low. Once we claim that low, I will take a little bit more profits, and then I'll just leave the rest for lower levels. Okay, and that is the trading opportunity that I potentially see if the bulls have any chance of forming a higher low without claiming this low. There's a particularly interesting level that I'm currently keeping an eye on, and it's basically an SFP from that low. Okay, so while I'm still here on the higher time frames, let's just take the arrows here out the way. So we got the fake out, and now the question is, are we going to take the low? Fortunately, it has a higher probability. Okay, right, guys, so let's go here to, I'm just going to stay here on the 4-hour time frame, okay, because this range is getting quite large. Just a little bit of a recap, and I'm just going to freestyle it over here. Okay, this can be counted as a 3-wave structure. It can also be counted as a 1, 2, 3, 4, 5 in a contracting diagonal. An ending diagonal carries higher probability, and then you also have the 3-wave structure. So the probabilities lean in the favor of the bears at the moment. It's either a 3-wave structure or it's an ending diagonal in a 5-wave structure. Okay, and since this pivot was formed over here, you can count 5 waves to the downside, corrective structure to the upside, 5 waves to the downside, corrective structure to the upside, and this is why I was so interested in shorts. You have that resistance area, and that's where we got the rejection, because there's definitely on the cards, there's that potential where price just rockets to the downside. It falls to the downside. Okay, so, and this is why shorts inside of this range for me looks way more interesting than longs. Not to say that I won't attempt longs. I did attempt a long at the daily level. Okay, that was in Monday's live stream. I did it live here in the live stream. So it's not to say that on the higher time frame I'm leaning more bearish, that I can't take longs from a day trading perspective. Okay. Right, legends, that is basically the most bearish case scenario. And the most bullish case scenario is a 1, 2, 3, 4, 5 in a leading diagonal. And then you want to count this as a corrective structure that does not take the low, and we turn around and we go and take out the highs and beyond. Right, so those are basically your high time frame scenarios summarized. Most bearish is, that's the high. Most bullish is you form a higher low and you continue. The bullish case scenario unfortunately does not look great, even if you claim the high. Okay, because this can still be labeled as an A, a B, and a C. It takes the high and it rejects. So momentum still favors the bears for the moment, unless price action can prove us otherwise. And I like to let price action make the decisions for me. Okay, if price action looks bullish, I am bullish. If price action looks bearish, I am bearish. It's price action that determines the direction in which I lean towards. And during all of this, I can still be attempting longs and shorts. Okay, so while price is currently, excuse me, falling here to the downside, I want to focus here on the 15-minute time frame. So one trading opportunity that I'm specifically looking at the moment is the following. Okay, sorry guys, I've got some phlegm in my throat. I just want to get rid of it. Let me just do this. Okay, let's try again. Oh, now it sounds like I have my radio voice on. Okay, right, legends. So the first trading opportunity on the 15-minute time frame is I want to see how price is going to react at the 0.786, claiming the liquidity below the low. If price falls to the downside and it gets a reaction, it slows down, okay, that could be an interesting longing opportunity for me, okay, where price does not take the low. You basically have a 1, 2, 3, 4, 5 in a contracting diagonal which is leading, which does not take the highest probability, but it's possible because you can also label this A. You can label this A, B, C, but I would like to see one more low for an A, B, C, and then you go back up. So the level that is the closest where I'm interested in a long is this zone over here. Okay. In a ABC, the B can go deep and it can even tap the 0.88. Okay, it can even create a flat where it dips below, gets acceptance back above, but it is an interesting longing zone that I will be keeping an eye on. Remember, even from that trend line on the 4-hour time frame, okay, usually when you get the fake out, you take the lows and you get acceptance back above. So I would rather be wanting to look for longs in this zone than trying to play the breakout of the trend so that I have better risk management and I can already be in profits and have a protected position by the time the breakout happens. Okay, so what's interesting about the structure is that guys, you can count this structure in so many different ways. WXYs, ABCs. I just want to keep it simple. Okay, you have the start of something and you have the end of something. You can label this a wave 1, you can label this a wave A, okay, however you want to label the structure here to the upside. It can be counted as a 3-wave structure, it can be counted as a 1, 2, 3, 4, 5 leading diagonal. Unfortunately, leading diagonals takes the lowest probability. It's more common to see an ending diagonal. So this can also be a C. Okay, ending diagonal in a C wave, and now we're building impulses here to the downside. But there's something interesting about this structure that I would like to discuss. Okay, and I'll get back to the higher time frames now if these scenarios do not play out. So I'm happy days from a shorting perspective. I'm already in that short. If price continues to the downside, I'll just make more profits. But when I'm in a short, I'm always interested in a long. When I'm in a long, I'm always interested in a short. It's nice to hedge, okay? It's really nice to hedge sometimes. So now that I'm looking for a long, I have a short position that I can hedge against. Right, so first short is an SFP from the low, because this could be an A, a B, and a C to the downside. Okay, and yesterday, yes guys, yesterday in the community I did post this looks very much like a 3-wave structure, increasing the probabilities to take the high. That's what I said last night just before I went out for dinner. Okay, but there's many things that can happen, and that's why you need to trade with exceptionally good risk management, because a 3-wave structure can also turn into an A, and then you have a B, and then you have a larger C to the downside, which still increases the probabilities of taking the high. Okay, but you can just have a larger corrective structure. Right. The invalidation, because one of the scenarios I spoke about yesterday is to say the guys, for the most bullish case scenario is you have a 1, 2, and now you're building up 1, 2, 1, 2, 1, 2, you should not take the low, which we did. Okay, so if you were looking for a long opportunity, I mean, you want to get in as low as possible to go and take the high. But also from a trend line perspective, you did break out successfully, and from a trade management perspective, you should have made profits with that breakout, even if it did not claim the high. Okay, just depends on how you manage your trade. Right, so what is interesting about the structure here to the downside is that for me, okay, without going into the detail counts, it really still does look like a 3-wave structure. Okay, I don't have to go into the details of the count. I know that you can count it as an expanding diagonal as well, which is so rare to see, guys. It's just so rare to see, so I'm not even going to talk about it. For me, it looks like a 3-wave structure, which means that this can be an A and this can be a B, and now you're forming a C wave here to the downside. Hence, I'm interested in a longing opportunity, depending on how price reacts at that level. Okay, because in a C wave, you have to see 5 waves, and I can see a 1, 2, 3, okay, maybe 4, or maybe this is a B, C, and a 4th wave, and then it falls to the downside. But what I would like to see is this structure carries the highest amount of volume. Okay, so for me, I typically will then label this structure a wave 3. Okay, so this could be an A, a B, and a C now to the downside, and now you have your 1, 2, 3 with the highest amount of volume. I'm still expecting 4 and 5. And then once the fifth wave is finished, I want to see this low made on low, still a lot of volume, but it needs to be lower volume. Okay, that will give me a clue as to, okay, this could be an A, B, C, and then we break back to the upside. I don't know how deep it's going to go. It could swing the lows. It could bounce inside here. It could SFP from the low. But, you know, this is why I need to set my alarms, pay attention when my alarms go off, and then make that trading decision when price gets to my area of interest. This is my area of interest. I am not interested in any longs until price gets here. If it doesn't get here and it starts rampaging to the upside, not interested in the long, unless I have a different plan to get into that long. Okay. And let me discuss that different plan. I do have a different plan. If it front runs, I have a plan to get into the long. Okay. Do I still have that? Yeah. I want to discuss this. Ka-ching. Right. Would you consider a double bottom also? Yes, Nico, I will consider a double bottom. Okay. Not sure what's wrong with my throat today. I have so much phlegm and feels like my voice wants to go away. Okay, right, legends. Now, if this is A, okay, we have to play what if scenarios, because that's what I do as a technical trader. There's many what ifs. If this happened, then this. If this happens, then that. You know, that's what I do as a technical trader. If this is a A and this is a B, and now you're forming your C wave to the downside, well, then you have my channel to connect wave 1 and 2. That's my channel. That's the parallel channel that you guys see here running to the downside. As long as price is below the channel, it could literally just continue to fall. And that's why you need to be very careful how you execute your longs, because regardless of how I count the structure from an Elliott wave perspective, it can get nasty here to the downside. Maybe you start dropping with increasing volume. Okay, you correct and you keep on the momentum to the downside. So it's very important for me to get reactions at the level so that I can get in with good risk management. Okay, because I know that as long as price is below this channel, it could get nasty to the downside regardless of how I count it from an Elliott wave perspective. And I've seen that before. But to make it simple, this could be your A, your B, and now this is your 1, 2, 3 outside of the channel. Very normal to see it. And then you do not want your fourth wave to tap the top of the channel. Okay, ideally, most commonly, that is what I like to see. So price needs to do whatever it wants to do over here, not tap the top of the channel, and I want this low to be claimed again. And I want to see increasing volume, but it needs to decrease. Okay, and I can tell you guys now, I know myself now, even if there's increasing volume and I get a reaction at a level and I can get in with good risk management, I will most likely attempt that trade as well, because I know that C waves can also end on a high amount of volume. Okay, but ideally what I would like to see is decreasing volume between your 3 and between your 5. Okay, then now the question is, after you have a 5 wave move to the downside, you could always have a correction and then continuation to the downside. But I just want to play, I want to be part of a little bit of upwards momentum. It could also be the end of the A, B, C and takes the high again. So it's just about how I'm going to manage this trade. It could definitely break out and take the high again. Stop me out of the short, and then at least I'm in a long. Okay. So if price for some miracle does not take the low and it starts getting here to the upside, okay, this is where I might, I don't know if I'm going to, I might attempt a long over here, because that will invalidate the fourth wave. Well, it will give it low probability, especially if it claims the 0.618. Okay, especially if the 0.618 is claimed. So depending on what I see over here, I might attempt a long. Okay, I'll see when price gets there, but it will invalidate a fifth wave to the downside. Okay, and it could morph into a larger corrective structure. So what best case scenario, okay, let's discuss best case scenario. Price comes up, it taps the 0.618 and it continues. You know exactly where to put your stop loss, you play the breakout, and then from that bigger trend line perspective, you see the breakout to the upside, price forms a higher low and continues. Worst case scenario that happens is price taps the 0.618 and price just keeps on chopping. You form a larger corrective structure, maybe a triangle in a Y wave or a larger triangle in the X wave. That's what I'm saying, guys. I'm not too sure about the long here. I am way more interested to catch a long in this zone, okay, even if we claim the lows. Okay, so I will consider a double bottom as well. So let's say price does this. Okay, I will consider a double bottom from this low as well. And that in a nutshell is my trading plan. Yeah, on the smaller 15-minute time frame. Hello devil, didn't we already finish the wave 4 of that 3-hour move up? Yeah, that could be. And that's why I'm saying, guys, this can get nasty to the downside, okay? Because this can be labeled also. If you go into the smaller time frames, it doesn't look great, but it's not invalidated. It's just extremely rare. But this structure can be counted as an impulsive structure in an expanding diagonal. I went on to the 1 minute, I looked at it, and I was like, yeah, you can fit the expanding structure in there. They just never carry the highest probability. Expanding structures, guys, is like 1% probability of them playing out. Okay, so if they do play out, you know that you've seen something very rare unfold in front of your eyes. But yes, in that scenario, you could say, well, you have a 1-2, 1-2, you have a double 1-2, you get a 3-4, 5-4, 5, you get a correction up, and you get a massive big continuation to the downside, because you need to form your wave 1, your wave 2, and then it builds that, excuse me, third wave to the downside. Okay, and this is why I'm maintaining a lot of the short. Okay, because I know on the higher time frame, regardless of how I count the structure, I know on the 1 hour time frame, okay, you could have a 1, 2, 1, 2 done. And now it's building the first 1, 2, 3, 4, 5 to the downside. But basically a large third wave to the downside, because after 1, 2, 1, 2, you want to start seeing acceleration to the downside. Okay, and this could now be building the first wave inside of the bigger third wave here to the downside. So I know that it can get very nasty. But that impulse down can be C of Y. Yes, can. That's what I'm saying, guys. It can be counted in so many ways. Okay, for the bulls. Yes, for the bulls. Right. So there's the chance that this is a WXY. That's the end. Okay, ABC, WXY, however you want to count the structure, whether that's the low, whether this is the low, okay, this can be the end of something. And this could be the start of bigger momentum to the downside. But I have my plan ready. I'm already positioned in the short, so I'm not really too concerned about looking for shorts. Okay. I'm now interested to look for longs because I know that this structure can also be counted as a contracting diagonal. Leading doesn't carry the highest probability, but there's a chance to form a higher low and continue. And you basically form an A, B, C. Okay, so looking for longs. Right, could we be looking at at finishing wave? Sorry guys, I need to put the comments on here when I read them. Could we be looking at finishing wave 4, then finish wave 5 at 66.1k? Yes, now let me just take the noise here out of the chart, and I need to bring the bigger structure in here. Okay, so if price continues to the downside, okay, like Mr. Joan also pointed out for the bulls, you have your 1, 2, 3, 4, 5. So on the larger time frame, this is a very interesting longing zone. Make no mistake, I am interested, okay, in well, the bearish scenarios looks way better than the bullish case scenarios, but I will definitely be interested and looking for a long depending on how price reacts in this zone, because this could be, guys, and I know I'm just freestyling over here. I do have the scenarios prepared. Okay, let me say, is it this one? Right, here we go. Here's the scenario. Okay, so we could be wrapping up the C wave over here. That takes the low. First level that I will be keeping an eye on, and I do like the 0.7. I think the community now already knows. Devil likes the 0.7. Okay. Do you guys know where we got the bounce? Also, you know, just to show everyone that 0.7 sometimes is magic, because also when I take a fib from the low to the high, where did we get the bounce this morning? At the 0.7. Okay. 0.7. Right. Where did we get that bounce? If I'm not mistaken. Was it the, I don't think it was that one. It was, I need to go back here onto the 15-minute time frame, because this is something that I shared with the community as well. Okay, when you take a fib, was it this one? Price fell down, bounced. Where did it reject? 0.7. Okay, when you take a fib from the low to the high, where did that bounce take place? 0.7. Where did this bounce take place? From this low, 0.7. So that 0.7, it's got its tricks up. It's, you know, it's a little magic number, that one over there. So I do pay attention to the 0.7. Okay, so in the larger scheme of things, for the bulls, you have, where's my contracting diagonal? This is the scenario that you're basically looking at. Okay, let me just take this out the way. Ka-ching. Right, and let me do this, because it can still claim the highs and then fall again. But basically, you're looking for price to form a higher low. That is either the low that's in. This is why I'm looking for longs in this zone over here. Okay, or you have now completed your W, you have your X, and now you're going down for your Y in your A, B, which is either done, okay, or you form a larger B in a three-wave structure, B, C. So I'm interested in longs. Doesn't matter how structure, okay. If price does move up here aggressively, well, then I'm going to be looking for shorts, because I'm going to get stopped out of my short. Okay, maybe I'm positioned in a long, because now I'm positioned in a long, now I'm looking for a short. Okay, that's just how I like to trade. So it must be said, like I said yesterday as well, guys, that this low was made before the 0.382, this red line. So when I take a time fib from the low to the high, so it would be nice for price to form one more low. Okay, W, X, Y. 0.7786 is the zone where I will be looking for a long, because that is where the bulls can step in and send price to claim the high again. Okay, how to add 0.7 to chart? Right, you need to go into your settings and add the number. Oops, no, that's my drawing tool. Okay, guys, there's so many YouTube tutorials and things. I mean, that's just a trading view thing that you need to figure out. Okay, right. But now also this can be a leading diagonal, and this is now the danger about this situation over here, is that for the bulls you want to form a higher low. Okay, I think there's a higher chance to take the low again. Technically, it just looks better to take the low again, specifically because of the 0.382. W, X, Y, A, B, C in a Y. Okay, that's what I would like to see, is to form a fresh low after the 0.382. Technically, it looks better. Okay, but make no mistake, I will be looking for a long in that zone that I've just discussed on the 15-minute time frame. And I know, guys, it gets confusing. Well, is the low in? Is it going to make a low over here? We don't know, but I have areas of confluence, and I know when to look for, because I know, for example, if price forms a higher low here and it bounces back to the upside, I know that this can be a larger A, B, and then it still comes down for a C. So it's just about how I'm going to manage the trade. If price bounces from here and it does not take out the low, I will be more aggressive with profit taking to the upside, and I will be looking for shorts more aggressively. Maybe it sweeps that liquidity above the high. Okay. If price continues to fall down and it bounces in this zone, then I will manage my trade differently. I will still take profits to the upside, but I will leave a bigger position open to claim the high. So it's just about how the structure unfolds will tell me how I need to manage my trade that I'm in. Okay, but the local structures inside will also tell me, okay, show me. So it's not easy, but then also from a bearish case perspective, you have a leading diagonal or an ending diagonal to the upside. This is what I discussed yesterday as well. And now you have a 1, 2, 1, 2, maybe the high is in over there. And now you build a 1, 2, 3, 4, 5 here to the downside. You take the low. Okay. And this is why I'm going to leave a lot, that position open for lower levels. So that is basically my trading plan in a nutshell. Okay, because that's also still your option that I've discussed yesterday. The low is either in, okay, you make one more low, but there's a chance where I'm going to look at an ABC, price rejects, and it falls back to the downside inside of that consolidation area. Okay, but I need the B wave to be in order to calculate proper targets for that C wave. Okay, at the moment, I'm just looking at price action here to the upside. So I want to go here to the 2-hour chart, right? These consolidation areas I know are important resistance areas. You have one there, you have one there, and you have a big one over here. Okay, so if price forms a higher low and it does continue to the upside, that is where I will be looking for shorts. And if I am positioned in a long, that is also where I take profits. As soon as price hits resistance, I take profits. Okay, and that's how I will manage this trade. Hope that makes sense. Remember to smash up the like button if you do enjoy the education here on this channel. If you'd like to see more of me here in the mornings, and you can smash up that like button to show your appreciation. Sorry guys, I just want to do something over here. Something is not right with my camera. I just want to check something here. Oh, that looks a little bit better. Okay, it keeps on giving me an error message that it's being overexposed. So it's just some technical jargon that I'm looking at. Okay, right. That is, in a nutshell, guys, very similar to what I mean. Price is still at the same area. Okay, we got the rejection yesterday, so basically everything that I've been talking about this week is still very much the same. Okay, so maybe for the rest of the live stream we still have some time left. For the next 20-25 minutes I will go through some comments, because in a nutshell nothing has really changed since yesterday. I am positioned in the short. Okay, make this a little bit bigger. I'm positioned in the short. I've taken a big chunk of profits already. So if price wants to continue down while I'm positioned in the short, but I'm now looking for longs. Okay, I want to hedge against this short. Right. And remember, if you want to be part of the community, DM me the word access. I just need to do this, guys. DM me the word access. And remember, if you want to be part of the community, there we go. DM me the word. Let me zoom in. DM me the word access. Here's my Telegram, and I'll send you the instructions on how to join the community. Okay. Right. Let's go back here into the comments. Let me just zoom back out. Oh, Mr. Sheldon. I think I'm still I think the only reason I'm still subscribed to Crypto Banter, I'm not sure if you guys know Crypto Banter, is because of Mr. Carl Dubes. I think Carl is really good. Okay. Not so much the other people. Right, guys, let me go and make this a little bit bigger. Okay, let me put myself on the other sides. Right. Oops. Let me just put that screen back on. Let's go through some comments. Mr. Crypto Big Brains, never be greedy. Always take small profits and don't hold your trades for too long. Yes, but also know where to take profits, okay? So sometimes, you know, people I see, they leave runners and they make nice profits with the runners, but they still don't know where to take those profits and they get stopped out without taking profits from the runners. So you always need to have a plan, even if you leave a runner, where you're going to take those profits. Okay, what altcoins are you buying for alt season? Well, I already have an altcoin portfolio. Some of them are on break even, some of them are bad, like deep in the red, but I'm not adding anything to my altcoin portfolio. Maybe what I can do is in the next live stream, I can share with you what I do have in my altcoin portfolio. Okay, but I know off the top of my mind, I've got Chainlink, I've got Doge, I've got ETH. My biggest bag in altcoins is ETH. I've got ICP, Doge I've mentioned, but yeah, so, what's the other one? Litecoin. I've got some dinosaur tokens there inside of my portfolio. Okay, check out the Wyckoff distribution, very interesting. Joy, yes, Joy. I don't have that chart open now, but I mean, it's very interesting. I'm not sure if you maybe recently shared it inside of the community so I can show everyone. But yes, Joy, I wanted to share that with inside of the live stream. I just don't know if I have that link available now. Let me check here quick. Chart talk. No, I don't have that link now, Mr. Joy. I know that you've shared it many times and so far it's playing out to perfection. Is it this one? Yes, let's do this. I've got it. I'm somewhere going to share Mr. Joy's picture over here. This looks very bearish. Okay, this looks very bearish. Let me just make this smaller and here we go. Right, that is a Wyckoff distribution pattern, and so far it looks like it's just going to continue here to the downside, which also aligns with the ending diagonal. Okay, so from an Elliot wave perspective, you know, I've already said that there's a good chance that that could be the high and you're building impulses here to the downside. So from a Wyckoff distribution perspective, so far it looks like it's following 100%. Okay. The question is it going to continue or is it going to invalidate this Wyckoff distribution? Okay, so it must be said that the bearish case scenarios does carry the highest probability at the moment. Okay, here on the daily time frame, there's nothing bullish about the structure, this local structure to the downside. So far, there's nothing bullish about it. You have a high, lower high, lower low, lower low, lower low, lower high, lower high, lower high. The trend is your friend until the very end. And for the moment, there's no shift in momentum. So this can continue down until one of these highs are claimed. Okay, you need to start changing market structure. That will be a local market structure change. On the macro, you want that high to be claimed. Okay, but the bulls are going to have to step in to show signs of a reversal. And at the moment, there's nothing bullish about the structure here to the downside. So understandably, that is why a lot of people, from a technical perspective, are bearish. Because this move to the downside is bearish. And the trend is your friend until the very end. And for the moment, the trend is down. So people calling for $100,000, people calling for this to be the end, there's no sign of reversal just as yet. The biggest sign that I think a lot of macro players will look at, and institutions, people that trade with an insane amount of capital, they will look for that high to be claimed. You basically want to form a 5-wave structure to the upside, an impulsive structure to the upside. You want to change larger time frame structure. That is where the opportunity lies. Okay, but I've spoken about this many times in my live stream as well. Okay, let's go through some more comments. I just want to do a little bit of a refresh here, see where the likes are standing. Okay, let's go through some more comments. Okay. Oops, did I lose my comments? Where's my comments? Let's try this again. Oops, did I lose my comments? Ah, there we go. Bro, why not buy XRP? I do have XRP in my portfolio. I do have. XRP and ETH are the two altcoins that I made the most money with during the last 2 years. Okay. I remember XRP, and I know, guys, the reason I don't like to talk about altcoins is as soon as I talk about altcoins, people drop off the stream because most of the people here are interested in trading Bitcoin. Okay, but out of interest, XRP, I can show you guys where I bought XRP. XRP USDT. Just want to bring up the one for Binance. Okay, let's bring up the Binance one. Go in here. Go to the daily time frame. I know exactly where I bought XRP. I want to go to the logarithmic, and I haven't actually looked at XRP in a while, but you can see here I did some technical analysis. Where did I buy XRP? Yeah, this is where I bought XRP. Was it? Yeah, this is where I bought XRP. Okay, take the fib from the low to the high. This is where I bought XRP. Okay, that's where I bought XRP. So I'm still in profits. And that trade was shared live. Okay, in a live stream, I told everyone I'm buying here the breakout. People laughed at me because I didn't play the breakout over here. And I said, I want to see, because price made, you know, I remember the technical analysis. I want price to make a higher high. And only after I see the higher high will I be interested to buy the retracement. So people in the live stream played the breakout. They made nice money here to the upside. And then I had people saying, don't you regret not playing the breakout? And I said no, because I'm waiting for the retracement. We got the retracement between the 7 and the 786. That's where I bought XRP. Well, and the rest is history. So I made the most money with XRP and Ethereum. Okay, that was my biggest altcoin win for the silly altcoin season that we had. Well, you can't really call it altcoin season. Right. In order to add some bullish sentiment in this bearish ocean, we have a full moon today, which basically means, guys, the interesting thing about the full moon is that usually price makes its lowest point when full moon arrives, and then it starts going up. And this is why, and I can only share with you what I do from a trading perspective. Okay, let's switch on the moon phases. Very interesting comment. Okay, let's go to the 4 hour just to give the phases a little bit of breathing room. What I like to do, and I've actually made a video about this, okay, in my previous channel. What I like to do on a monthly basis, every month I buy a little bit of Bitcoin. It's part of my DCA strategy for the long term. That's my long-term portfolio. Okay, every month I buy a little bit of Bitcoin, and when it's full moon, that is when I buy. Because usually when it's full moon, Bitcoin likes to make the lowest point inside of the structure. And when it's new moon, it makes the highest point. So you can see there was a little pivot over there. You can see that was the highest point with the new moons. And then here with the full moons, that's when you make the lowest point. So it can still drop here and then go up. And so from a DCA perspective, okay, if there is a day in the month that makes the most sense for me to buy, it is when there's a full moon in the sky. Hey, I'm a poet and I don't even know it. Right. So, and then obviously from an investment perspective, okay, I buy the dips when I see fear and greed at extreme fear. So I bought here quite aggressively. And if it does make another low, I will buy again aggressively. There, I don't care about full moon and new moons, whatever the case might be. Okay, so, but it is interesting that we are printing a full moon, so you could make that low and get continuation back to the upside until the new moon prints again. Okay, you guys can see every time a new moon prints, that's usually when you make, now it's in reverse, okay? In a bull market, you use it the opposite way, but usually with a new moon, it pushes price down. Okay, with a full moon, it pushes price up. It is said that this indicator is 74% accurate. I don't know, okay, but I have back tested it, and you do make more money from an investment perspective when you buy when there's a moon in the sky. You do make more money from a DCA perspective. I've done the calculations, all of it. Right. So for those of you that do buy, you know, maybe a word of advice, and I'm not a financial advisor, please guys, do your own research. Okay, so let me rephrase it. What I like to do is that I buy a little bit of Bitcoin every single month. And there's some other things that I buy as well. But part of my strategy is to buy a little bit of Bitcoin. and I buy my Bitcoin when it's full moon, because I know that I'm potentially buying it in the lowest point in that month, so that I don't end up in a situation where I buy every time I buy the tops. I rather want to buy the bottoms every time from a monthly perspective. Now that for me is a better buy. And when you go and do the calculations over a long term, you actually make more money in the long term because you're buying the lowest points instead of buying the highest points every time. So it does impact your portfolio over a long term. But yeah, very interesting. Okay. Mr. Baby Genius, I will go afterwards. I'm in the States. It's great catching Devil live. Welcome here to the live stream, Baby Genius. Hey, trader, let's go. Legends, almost 100 likes. I need to like my own stream here as well. I ran back test on the moon charts and it was roughly 72% accurate. Okay. Baby Genius. So at least it's, above 70 is, anything above 60, guys, in trading is good. Anything above 60 is great. Okay, so if the moon indicator has like a 72 or even 70% accuracy, it's something that that I do consider. Okay, works well in consolidations. Nice trick. Devold, I have better moon cycle indicator. It's called Market Session by TTC. I will go and check that out. Okay, after the stream. Thanks for sharing, Meme Cat. Okay, quite the poet. If the C wave consists of 5 waves, how do we expect a move that takes the local high if by Elliot wave theory we expect an ABC correction after 5-wave structure, then continue down? Ooh, Christoffel, I'm not sure if you're inside of the community, but I would prefer if you, just draw it out on a chart. It's quite a lot for me to try and make sense of just from a text perspective. Okay, because remember, and I'm not sure if I'm going to answer your question by saying this, is that remember, an ABC can also form a larger corrective structure, okay? So if I use this, for example, people will say, well, if we are forming a B, C, okay, and this one has to be 5-wave structures to the upside, well, after an ABC, okay, it also gives you a A. It also gives you a W, okay? Then you go down for another B, and then you go down for another C to the upside, and basically you form a larger 3-wave structure. So ABC can equal something else. Okay, and then it gets more complicated. You can build triangles. You can triangle in a W, a triangle in a Y wave, and then it gets a little bit more tricky, because I know I've seen some of the people saying that, well, you could form a triangle over here. Okay, so maybe you have a W, maybe you have your X here, and now you have a B, C, D, E, and then you fall to the downside. Well, there's still a lot that needs to happen before I can talk about that scenario. Okay, because if this is a W, this is a X, and you have a Y here to the upside, which is now basically, it could also be an A, and now you form an A, B, C, D, E, and a B, and then you go up for a C. So guys, corrective structures can morph into many things. You don't know what it's going to morph into. And usually, but the most confusing thing about a corrective structure is those damn triangles. Because you have a 3-wave down, 3-wave up, 3-wave down, and then you're trying to, is that a C, is that a E, what is that? You're trying to figure it out. So the best thing is, I wait for price to develop, I have my levels ready, and I execute my trading plan. I know it might sound confusing, but yeah, that's basically how. Okay, but this can still morph into something a lot more complex. Okay, but I can count a 5-wave move down, or a 5-wave move down, or a 3-wave move down. Okay, 1, 2, 3, 4, 5. This could also be an A. 1, 2, 3, 4, 5. A, B, C. Okay, C ended in ending diagonal. Well, then all structures needs to be 3-wave structures, which is fine. It can be an ABC. Okay, but now you have a running flat. So guys, it gets very complex, and I do run through many scenarios before I go onto the live stream. But I try and keep it simple so that everyone can understand. I try and keep it simple to, ABC structures, 1, 2, 3, 4, 5. I know that it can morph into so many things. And if I go through every single scenario, it's just people are going to feel like chameleons on Smarty boxes. You're not going to know what's going on. So when I prepare for the live streams, I try and look at the scenarios that I think looks clean, simple, and easy to understand. Okay, and most importantly, I can combine with that with the trading opportunity that I'm looking at. Right. What is the full moon indicator called? It's called, Mr. Crypto Big Brains, it's called moon phases. It's called moon phases. Okay, so for me today, it's time to buy my DCA portfolio. Sometimes I forget a little bit, guys, but you know, I get it more or less there in the zone. So today is when I add a little bit to my Bitcoin spot bags. Okay, right. What else? What else? Please, do you use TBO indicator? I don't know what that is. So if I don't know what that is, most probably not. The only indicator that I use is CVD. This is the only indicator that I use, and the only reason I like to use CVD is because I back tested it with my trading strategies, and then I try and figure out, does it positively contribute towards my trading strategy, or does it negatively impact my trading strategy? So do I make more money by using this indicator? Does it make my trading easier or worse? Okay, and CVD is the only indicator that I have found that positively contributes towards my trading. And it's a real-time indicator, it's not a lagging indicator. So in real time, it shows me what the market makers are doing and what retail is doing. So it's a very, for me, this is a very powerful indicator. Do we have some important news coming out? Let's go and check that out. Okay, put this on high impact. And right, so we have tomorrow non-farm payrolls unemployment rate 2:30 my time, which is about 1:30 Central European time. Okay, so I'm 1 hour ahead of Central European time. So 1:30 Central European time, 2:30 my time. And then today, well, oh, the Trump speech already happened early this morning. Okay, that's maybe why we got the drop. Right. There's actually a group of men that gather in the woods and they stare at the moon phases chart and attempt to conjure old season. They call the moon boys. This is classic. This is classic, Mr. Baby Genius. That's classic. Right. Swing long level or 60k more likely. Is 64 to 65 a swing long level or 60k more likely? It depends on how price reacts. Because guys, now this is the only chance the bulls have left. Okay, this is the only chance the bulls have left. So I don't know. I don't know how to answer your question. I don't know. The probabilities favors the bears. So there is unfortunately a higher chance to move down. But it could bounce. So I will be looking for a long in this zone. Okay. But I will only attempt the long. Okay, guys, I don't trade like this anymore. Where I'm like, okay, I put a stop loss below the low and I build a position in the zone. I don't do that anymore, and sometimes I do with limit orders, but guys, it happens like 1% of the time. 99% of my trades are executed using market order. I'm a reactionary trader. I need to see how price is reacting at a level before I make that trading decision. The days for me to just, add some limit orders here with my stop loss below the low, hoping for a bounce, and then you get stopped out, those days for me are 99% gone. There is that 1% of times where I will trade with a limit order because of my analysis. Maybe I'm not in front of the chart. I risk 0.5%, whatever I want to risk for that trade. But I need to see how price is going to react in the zone before I will take the long. Okay. But based on probabilities are higher to take the 60k low. And the reason that question is so difficult to answer is because you could first take the high and then take the low. or it just falls directly. I don't know, but the probabilities are higher that this can form. Either it's done, your three wave is done and it's building impulses, and this structure does support impulses to the downside, or this is a B, a C, and then you fall to the downside. I don't know. I just trade the reaction at those levels. Based on this structure, this is why I took the short, because I know that your double 1-2 could be finished over here. Okay, you basically have your nested 1-2s here to the downside, right? This is your bearish case scenario, and I want to be ready for it. I'm already in that short. I'm ready for the scenario if it had to play out. I'm ready. I've already taken a lot of profits. So if it wants to fall, it can fall. I will take more profits here to the downside, where I will be looking for longs. But I also know that this can be your WXY. Okay, where's my ka-ching? It could also do that. You have a WXY, A, B, C in Y. And it can get more complex. That's why I'm saying, guys, corrective structures can get complex. You could also form a B. So B moves over there. And then you go down in a C. And you basically still have a WXY. Okay. This is why I have my levels ready. I know that there's a liquidity grab above the highs. That's where I'll be looking for a short. Okay. I already shared with you guys, I'm looking for a long, depending on the reaction that I see. If it drops, this is where I'm looking for my long. Maybe swing failure from one of these pivots would be great. So I know that there are many scenarios and it can create confusion. But for me, it's quite simple from when I have my levels ready, I just look for the reaction at those levels. It's like, you know, the short that I took yesterday. Was it yesterday? Yes, when I took the short. Why did I take this short? Okay, how did I get in there? I had a simple fib, okay, from the low to the high to the low. And where did we get the rejection? Was it that low or was it? Just want to make sure that I'm here on the right chart. Why is it not showing me the 1-to-1 extension? Because I know yesterday I got the rejection at that's why I entered. I just want to make sure that I got this right. Okay, A, B, C. Why is it not doing it properly? A, B. Okay, there we go. So from yesterday's analysis, I knew that this could be an A, 3-wave B, and a C to the upside, or a WXY. The 1-to-1 is a target, or this can be a 1, 2, 3, 4, 5. But most importantly, what I look at is that I have an Elliot wave scenario that supports a rejection in this zone. But the most important thing that I look at is that when I draw my fib, did I get reactions at the previous levels, regardless of how I count the structure? The 0.618 got a rejection. The 786 got a rejection. So naturally, I will be looking at the 1-to-1 extension. And when I saw the rejection, I entered. I have a scenario that supports a rejection. Okay. So I don't like to confuse myself with too many Elliott wave scenarios. I like to look at the ones that make sense to me. I draw my fibs and I see the reaction. I'm like, okay, this is valid. I'm going to keep an eye on those levels. Price is creeping down. Yes, it could be making that little fifth wave here to the downside. So guys, I mean, the most important structure that I'm looking at right now is that parallel channel here to the downside. Where did I draw the parallel channel now? Okay, there we go. Okay, let me just clean up the kitchen a little bit. I don't really have any, guys, I don't have any levels. I only have Fibonacci levels here. When I switch on my daily levels, my point of controls, my weekly levels, okay, I go into the 1 hour time frame just to make sure that I have all my session volume profile levels or my naked point of controls. I actually think that one has been tapped. Yeah, this one has been tapped. So I can delete that. I don't have any levels close by. All I have is Fibonacci levels. Levels are up there. Levels are down here. There's nothing here. So the only thing I can trade is Fibonacci levels. And I can trade them very successfully. And price action. I see a consolidation. I look for a rejection. Okay. I see a pivot, I look for swing failure from that pivot. I know from a channeling perspective, okay, let's just take all the mess here out the chart. I know from a channeling perspective, well, okay, let me just switch off the session volume profile. Okay, you could have an A, a B, and a C here to the downside. 1, 2, 3, 4, 5. I want to see a low made on a decreasing amount of volume. So I know what I'm looking for. I want to see a swing failure from that low, because this can still turn into an A, a B, a C. And remember, your B wave is supposed to be an ABC, and it can still go up. And then you form that bigger B wave that I've shown you on the larger time frame. Okay, guys, I know it. I can just imagine how people feel when I talk like this that don't know anything about Elliott wave theory. I know I sometimes feel like it can be very overwhelming, because that's how I felt when someone spoke Elliott wave theory to me for the first time. Like, are you trying to teach me the ABCs? Why are you trying to help me count to 1, 2, 3, 4, 5? You know, and now you're talking about W, X, Y's and triangles, and you know, I know it gets confusing, but I am trying to explain it as best as I possibly can from a simplistic perspective. But I also know that repetition is the most important thing. The more you hear it, the more it makes sense. Tomorrow I talk about it again, and then another penny drops. Tomorrow I talk about it again, and another penny drops. Okay, and right, but I also need to always, guys, I need to give credit where credit is due. I'm not sure if you guys know Mr. Koons trading. Okay, he taught me most about what I know about Elliott wave theory. So always, I will give huge respect to Mr. Koons. If he's watching the stream, or any of you are inside of his community, I have a massive amount of respect for Koons, because a lot of people sometimes will make comments in my live stream to say that you just said what Koons said. I was like, well, I think our approach is the same, because he taught me most of what I know about Elliott wave theory. Okay, and the reason I learned from Koons is because he actually discusses probabilities from a structural perspective. So I've watched Elliotticians in the past where they just look at an expanding structure like it's nothing. There's, you know, equal probability. This can either be expanding, this can be contracting, whatever the case might be. The reason I enjoyed and I decided to learn from Koons is because he will look at a structure and say, guys, this is an expanding structure, but it carries low probability. Therefore, I'm actually ignoring it. Okay. When price taps the 0.88, that's where I learned to take 0.886. But then I went and I backtested what I learned from him. I went and I backtested it as well to get my own data from it. Okay, to support that, you know, doesn't really make sense. Anyways, guys, I know I'm going off on a tangent over here, but I do get comments from people saying that, Devold, your analysis is very similar to Koons. Well, you know, it's because I learned from the man himself. Okay, I know he's launching a book soon as well, and I have invited Koons to do a collaboration with me. He hasn't responded yet, but you know, I want to pay tribute to the people that has taught me what I know today. But I was already a successful trader before I knew Elliott wave theory. But now that I know Elliott wave theory, it's really giving me an edge on my trading strategies. It's giving me an extra edge now that I understand the structures. I can tell you guys now, the reason people diss Elliott wave theory and say it's BS, because I've had people, and I've seen them in the comments, okay, the reason people say Elliott wave theory is BS is because you don't understand it. And you're too lazy to put in the work to get to know it. Because once you click and understand Elliott wave theory, there's a new world that opens from a structural perspective. Okay, I do not use moving averages, not because I think it's BS, but it doesn't fit my trading style. I'm not saying moving averages are BS, because I know successful traders that use moving averages. All I can say is moving averages is not for me. I've tried it. I've tasted it, I've smelt it, I've eaten it, I don't like it. But don't say Elliott wave theory is BS if you haven't tried it, if you haven't put in the work, and it does take long to study. It's the most difficult trading strategy in the world, is Elliott wave theory. So it's easy to diss something if you don't want to put in the work. Okay, yes, the repetition is very helpful. Thank you, Mr. Nico. Is there a possibility wave 4 isn't finished yet? Wave 4. On the 15-minute time frame. Memecat, I can only assume that you are talking about this little local structure. Yes, there is a possibility that it's not finished. Okay, because if price bounces from here, okay, because this could be an A, this could be a B, okay, maybe it even bounces from here as long as it tapped to 0.9. When you take a fib from the low to the high, as long as that tapped to 0.9, you're inside a flat territory, which is fine. So you could have an A, a B, a C, and then you fall in the fifth wave. So yes, it can still form a larger corrective structure here, preferably not tapping the top of the channel. Usually they like to reject here in the middle or grinding against the channel over here, the fourth wave. So this could be your 1, 2, look at that one. Okay, you have a beautiful 3-wave structure. This could still form that and then reject to the downside. Or 4 is done and it just falls. You don't know. Okay, but I know where I'm looking for the trading opportunity. Okay, below that low. SFP from that low. Right, Devold, you look a year younger today. I hope you enjoyed your birthday celebrations. I did, guys. I had an amazing dinner yesterday. Okay, I'm a big steak person. Picanha, rump steak, sirloin steak, you know, any type of steak, you know, grass-fed beef, Wagyu beef, you know, I'm a big meat eater. I love my meat. Okay, I really love my meat. So yesterday my wife took me to a fantastic new steak restaurant that I've never been to before. It was an amazing experience. Okay, there's so much information in volume and CVD. I only use that with Elliot wave theory, of course. Why so much indicators analysis paralysis? Yes, guys, I know, you know, in the beginning, I had so many indicators on my chart. I had the RSI, I had Bollinger Bands, I had moving averages. You have those Lux indicators. You pay monthly subscriptions for those Lux indicators that tells you where to buy and sell. Okay, and I didn't make any money, guys. When I had all of that, I didn't make any money. It's when I started removing the noise from my charts. Guys, look at how clean my charts are. Okay, it's clean. All I have is volume and my analysis. That's my analysis. And then when I want to enter a trade, I will put in my fib, which is not an indicator, it's a tool. Okay, that's how I trade. I don't need a Lux indicator to tell me that price is now in a buying zone. Okay, I always, interesting fact, guys, interesting fact. If someone is selling you an indicator that tells you where to sell and buy, why is that person or company not just putting their own money in there and making billions? Well, why do they need to sell that indicator in order to make money if the indicator is successful? Because I can tell you now, if I develop an indicator that knows exactly where to buy and sell, I'm not going to tell anyone. I'm just going to put my own money in there and make money. Why do I need to sell it? It doesn't make sense to me. Sometimes you just need to think logically about these Lux indicators. Why are you selling indicators at a monthly premium subscription, $300, $500 per month, that sells you those little blocks? It shows sell, buy. You guys have seen it. I'm sure many of you have seen it, and it looks perfect. It's like, wow, every time that box is here at the high, the sell boxes are at the highs and the buy boxes are at the low. So I don't have to do anything anymore. I just buy when that thing tells me to buy, and sell when that thing tells me to sell or short. I've not heard anyone make money with those indicators because they're still lagging. So even here, they might flash and then they disappear. It flashes and then it disappears. You don't know where do you put your... Anyways, guys, I don't know how to explain it. But if you have had Lux indicators or any indicator that tells you buy and sell signals, I've never seen any one of them successful over the long term. Double bottom possible, Devold? Yes, double bottom is definitely possible because this could be an A, you have a B, and you have a C back to the upside. Okay, so, sorry, my mouse is stuck. Okay, there we go. Double bottom is definitely possible. So for a double bottom, if price does continue down, Okay, what I like to do is to take my trend-based fib from the low to the high, drag it a little bit across so I can see the levels. Maybe I put it on exactly on that one. That's what I like to do. I put on my flat targets. Ka-ching. Now I have all my levels to the down and to the upside. Okay, so these, I know that these are flat targets. So if price does not bounce here, now that's the next level I look at. Double bottom, 1.382. Most common also 1.382. 1.236, not so common. I have seen bounces there, but not a lot. It usually gets a reaction, but then it takes the low again when it bounces here. It's just something that I've noticed from a backtesting perspective. When you have a A and a deep B flat, that's usually where it bounces. Okay, invalidation for me usually is the 1.618. Is usually where I put my stop loss. You know, if I'm looking for a bigger swing trade and I know it's an A and it comes down for a B, well, I know where to put my stop loss. Okay, and then you have a high chance to take out the B as the A as well. So you label that a A, and then you have a high chance to take out the A. I hold on to my shorts after your analysis of yesterday. D-line is crazy. Yanni, yes, I'm still in that short as well from yesterday. Okay, I'm still in the short. I'm going to take a little bit more profits from the short if we claim the low. I'm going to take a little bit more profits. If price moves up from here, then it is what it is. I've already taken a nice little chunk of profits over here. But I got stopped out of my long. Yeah. Okay. I remember that daily level where we got the SFP. Where was that SFP? From the daily level. I rode it all the way up and I added to my position, got stopped out from the long, but with profits. Great. Now I'm in the short. Preach, devil. Guys, I sometimes feel like I'm preaching on the channel, so I need to stop doing that. I need to really stop doing that. Clearly, hey, devil, do you ever use Kuhn's three candle trick to determine is the fourth wave in? Austrian, I'm not sure what you are talking about. No, so the answer is most probably no. Okay, Kuhn's 3. I haven't, if you're referring to Kuhn's trading, I haven't actually watched him in very long. I haven't watched him in very long. I saw one of his crazy thumbnails yesterday and I thought maybe that's just an April Fool's prank, but I didn't watch it. Devil, to check value area low of the entire range. Let's do that. Take this out. Let's go to the 1 hour. Guys, I'm just having a little bit of fun here. You guys can see I'm very relaxed. I've gone through the analysis. I've spoken about all the scenarios. I'm not sure what else to say, so I'm just going through comments, having some fun. Ooh, yeah. Nice. That is support. That is support. Okay. So we do have some additional confluence here. You can see how price tried to hold the point of control. It's like, hold. No, lost it. And now we're at the value area low. So I would like that low to be swept and get acceptance back above. That will be a bullish sign, at least a temporary bullish sign. Because the most bearish case scenario, guys, I'm very aware of the most bearish case scenario. And this is why when I do attempt along in this zone, make no mistake, I'm trying my best to have the best possible risk management. Risk management is always the forefront of my mind when I enter a trade. Because I know this can be a 1, 2, 1, 2, 3, 4, 5, 4, 5, and it chops me out again. And then you get a correction and you get the continuation. I'm very aware of the bearish case scenario, but I'm also aware of the bullish case scenario. A, B, C. You go back to the value area high. That is why I'm interested in the trade. Right, let's go through some more comments. Totally makes sense. Yes, selling their magical indicator, then inform the market makers. Oil is 108 a barrel right now. Actually, haven't looked at oil in a while. Let's go check out oil. Someone asked me, guys, just out of curiosity, well, just out of interest, okay? 108, yeah. Someone asked me a couple of times already, why don't I look at news, or do I look at news when I trade? And my answer is always no, I don't. Because technicals always shows you the move before the move happens. You had a long downsloping trend on oil. When oil formed this trend, okay, that's when I started noticing oil. Someone else in a live stream also spoke about oil. That's where I started noticing oil. So from a technical perspective, when you start breaking trends, that's where I look for longs. When you break the major trend, that's where I look for longs. I also did a live stream and I spoke about this little retest here on the smaller time frame. Okay, and I said, guys, well, you know, that is a nice little breakout over here. That's a nice little breakout. So I guess the only thing I'm trying to highlight over here is that by the time the war happened and all the crap happened, okay, and I don't want to go into detail as to, you know, from a technical perspective, the technical people were already positioned. They didn't know why it was going to pump, because the news is the why. But they knew it could pump because it's showing bullish signs. So if you positioned yourself from a technical perspective, followed your strategy, you'd have now benefited from this momentum to the upside. And only once that happens does all the news come out. Oh, this is the reason oil is so high. Okay. But the technicals shows you the move before the news comes out. Very interesting. I thought about that the other day. I was just like, you know what? Oil was showing signs of a breakout long before anything was even mentioned, or war or anything like that. Because, I mean, this breakout over here, okay, was when was this? Let me just take all the scribble here out the way. This breakout here took place the 12th of Jan. 12th of Jan already. Okay, before all of the stuff at the moment. Do you think technicals drive the news, or news drives the technicals? I think technicals gives you the opportunity to get in, and news gives you the reason why it did what it did. So technicals gives you the opportunity before the news comes out. So maybe in saying that, technicals drives the news. Okay. Right, guys, I have unfortunately run out of time. I really enjoy the comments here. Remember, guys, if you want to be part of the community, Andy is doing some updates today. DM me the word access on Telegram if you want to be part of the community. And that's where myself and Andy and Dylan, which, by the way, Dylan, one of our coaches that trades altcoins and Bitcoin, has a 100% win rate for the month of March. Absolutely insane. So if you want to be part of that community, DM me the word access. Unfortunately, I have run out of time and would like to stay a little bit longer, but I need to go and do something else. So thank you so much for joining the live stream. It's been a little bit different here, just chatting to you, sharing with you what I think. Okay, have yourselves an amazing trading day, and I'll check you all tomorrow again. Until the next one, cheers for now.